I'm Dawson Schmidt here with the latest stories and developments in this week's Commodity Roundup on Trader PhD.
A more optimistic outlook on agricultural exports and less negative views on tariffs boosted farmer sentiment to a 4-year high in May. The Purdue University and CME Group Ag Economy Barometer Index rose 10 points last month to a reading of 158. That was the highest reading since May 2021. The increase was led by a 5-point jump in the Current Conditions Index and a 12-point boost in the Futures Expectations Index. The authors of the report noted that a more positive view of the agricultural trade prospects. 52% of survey respondents said that they expect ag exports to increase over the next 5 years. Meanwhile, only 12% of respondents believe exports will decline. That came with differing views from 5 years ago regarding how free trade agreements benefits agriculture. The strong boost in producer sentiment comes as input prices are expected to remain well above pre-pandemic levels despite lower crop prices. The USDA's Economic Research Survey forecasts 2025 farm expenditures at $450.4 billion, down 0.5% from 2024, but 29% above 2019. While beef trade with China remains virtually stagnant, trade organizations are working to fill the gap with other importers. While recent court rulings challenged the legitimacy of the Trump administration tariffs on China and other countries, a 32% tariff on U.S. exports to China remain in place. Non-tariff barriers such as expired registrations of U.S. beef plants have essentially halted trade. The U.S. Meat Export Federation says it's been engaging with other countries to find new markets for products that would have been headed to China. Promotion efforts have focused on regions such as Central and South America, and Colombia was the focal point there. But as explained by U.S. MEF Vice President of Asia Pacific Ji-Hae Young, shifting frozen beef short plate to Korea has been one of the most successful promotions.
Collaborating with the third largest retail chain called Lotte Mart, having 105 stores nationwide. Korean importer took an advantage because the short beef supply limit the product availability in Korea for the last couple of years due to the cattle cycle in the U.S. So it's a great opportunity for the retailers to buy the reasonable price of short plate for the Korean consumer, and also good for the U.S. exporters because it creates a new demand through these promotions.
According to the USDA, U.S. beef exports are forecast at 2.7 billion pounds, the lowest since 2016. Tighter U.S. supplies and global competition are expected to bring exports next year to their lowest since 2012. Drought impacts are expected to dig into yield potential for wheat production in China. Bloomberg reported that the country's wheat output could fall 5% this year. If realized, that would be the lowest since 2018, according to a survey of traders and analysts. Adverse weather caused a crop scare 2 years ago after heavy rains damaged a wide area of production. That led to China importing record volumes of wheat in 2023. Since then, a rebound in harvest has led to slower imports. Chinese customs data showed that year-to-date wheat imports are off to the slowest start since 2018. Lower crop yields could lead to China importing more wheat. In May, Reuters reported that Chinese buyers bought between 400,000 and 500,000 metric tons from Australia and Canada as a likely hedge against lower harvests. Thanks for watching. I'm Dawson Schmidt, and this has been Trader PhD.